If solar demand continues to increase and geopolitics stays very unsettled, missile demand is a part of that, and gold continues to increase because of all the central bank buying, then it's easy to envision triple-digit silver. $100 an ounce silver is mathematically not even that crazy in terms of the gold-silver ratio. If gold goes to $5,000 an ounce, it's easy to envision historically. We've been there before in terms of the relationship between those metals. And there's no reason why we can't go there again. Used a gold standard, the gold price would have to be $15,000 an ounce or so, something like that, which is to say the dollar relative to gold becomes way less valuable.
Financial analyst John Rubino of dollarcollapse.com believes silver is entering a transformative phase that could drive prices to $100 per ounce before 2030. His analysis centers on central bank gold buying as the primary catalyst pushing precious metals higher, with gold potentially reaching $5,000 by Q3 2026. Triple-digit silver isn't even that crazy. Mathematically, it makes sense, Rubino states, citing historical gold-silver ratio patterns. Technical analysis points to silver reaching $88 initially, with extended potential to $100, most likely between mid-2027 and mid-2028. This timeline represents an accelerated appreciation compared to historical patterns, driven by changing investor behavior and market conditions. John Rubino explains that transitioning to a gold-backed system would require a significant devaluation of the dollar, potentially pushing the gold price as high as $15,000 per ounce. According to the expert, this level could be reached through a comparable 600% gain, highlighting the magnitude of revaluation needed to restore trust in a gold-based monetary system. John Rubino believes silver is entering a transformative phase that could see the precious metal reach unprecedented heights. Unlike previous market cycles where silver consistently lagged behind gold, current market dynamics suggest a fundamental shift is underway that positions silver for exceptional performance. The metal's relative affordability compared to gold attracts broader investor participation while offering leverage to precious metals exposure. Growing investor interest reflects both silver's catch-up potential and its dual role as both industrial commodity and monetary asset. While short-term pullbacks may occur if gold prices soften due to continued correlation, the convergence of central bank buying, industrial demand growth, and evolving investor patterns creates conditions for silver's most significant bull market in decades. Current market setup suggests earlier and more dramatic price appreciation than historical precedents, positioning silver to fulfill its potential in an unprecedented bull run. Before we get started, make sure to like, share, and subscribe. 97.4% of viewers haven't subscribed. Be part of the 2.6% who have by hitting that subscribe button and turning on the bell for updates.
It's silver's time. It had underperformed for such a long time. And eventually, the way precious metals bull markets work is that people buy gold first because that's the big name in safe haven assets. But then, you at some point you look at a Krugerrand, which is basically a tiny little coin, fits in the palm of your hand, and you think of how much money that is. And then you think how many silver ounces. Okay, I'm back to the gold silver ratio. But people switch to silver in the normal course of things during a precious metals bull market, and that leads to silver outperforming. So, it could have been that with a World War III kicker very easily. And if that's the case, if solar demand continues to increase and geopolitics stays very unsettled, missile demand is a part of that, and gold continues to increase because of all the central bank buying, then it's easy to envision triple-digit silver. $100 an ounce silver is mathematically not even that crazy in terms of the gold-silver ratio. If gold goes to $5,000 an ounce, it's easy to envision historically. We've been there before in terms of the relationship between those metals, and there's no reason why we can't go there again. And the numbers work out to a pretty spectacular run for silver. So it's possible that we can just go back to a gold standard. And that gives us a system that is stable and that allows us to grow organically without, soaring debt and raging inflation going forward. But the only way two things about that. The only way that'll happen is if it ends up being the least bad option for governments on a list of horrendous options. Because to go back to something like a gold standard or some other commodity-based standard, whatever, there will be arguments about what form it should take. But to go back to that means governments have to give up the power to create money out of thin air. And, these people are sociopaths to begin with and narcissists. But even a normal person wouldn't give up that power without a fight, right? And these guys who are in charge of the world right now are going to be very unwilling to do that. So it has to be something that's even worse, staring them in the face. Second thing about a currency reset is that it hurts the people who trust the government. In other words, the ones who don't really deserve to be hurt, just the regular people who have dollar bank accounts that they're using to save for retirement, or bond funds in their retirement accounts, things like that. Those things become vastly less valuable when the currency is devalued in order to go to a new monetary system. Because, if we used a gold standard, the gold price would have to be $15,000 an ounce or so, something like that, which is to say the dollar relative to gold becomes way less valuable. And so everybody who holds dollars is hurt by that. So, you got two groups of people: the sociopaths who don't want to give up that power but will be forced to, and the regular people who will be impoverished by it. So it's not a pain-free process. It's just the least painful process. So we have to get through the civil unrest that comes from us devaluing the life savings of 70% of the country or whatever. So not fun, very painful for people who don't deserve that pain, but possible and workable. It's the kind of thing that might save us, but it won't be a fun process. The only people it'll be fun for is the gold bugs, because their main asset will be revalued by 3 times. Maybe it'll triple or maybe quintuple, depending on how it all shakes out. So if you've got a bunch of gold and silver, you're positioned financially to actually benefit from what's coming.
The 1970s marked one of the most inflationary decades in modern U.S. history. A combination of factors including expansionary Fed policy, the abandonment of the gold standard, Keynesian economic strategies, and shifting market psychology fueled a sustained rise in prices. As inflation surged, mortgage interest rates soared to nearly 20%, putting immense pressure on both consumers and financial markets. John Rubino highlights how this crisis was ultimately resolved in the early 1980s through aggressive monetary tightening. The Federal Reserve, under Paul Volcker's leadership, raised the federal funds rate to as high as 16%. 10-year Treasury yields followed a similar trajectory, and mortgage rates peaked around 18%. This dramatic policy response is reflected in historical interest rate data. From 1971 to 2025, the benchmark U.S. interest rate averaged 5.41%. It reached an all-time high of 20% in March 1980 during the peak of the inflation crisis, and a record low of 0.25% in December 2008 following the global financial crisis. Most recently, the rate was recorded at 4.5%, highlighting how current monetary conditions remain historically low despite rising inflation concerns. Let's get back to the video.
And that, of course, feeds into finance. When you start thinking that about your country, you don't want the currency anymore either. So gold and silver, towards the end of the decade, went absolutely through the roof, which is the investment thesis from all of this, And assuming today that, we've had bouts of inflation very recently, we get involved in the world, but the world is super messy and we don't really seem to understand what it is we're doing out there. And we feel like we're being manipulated by one party or another. And the dollar is losing its value kind of steadily, and that could become disorderly at some point. And gold and silver are now back to going up. So it's starting to feel like that again. And it resolved. Here's the important part of the comparison. In the early 1980s, we resolved the inflation of the 1970s by raising interest rates to double-digit levels. The Fed funds rate went up to like 16% at one point, and 10-year treasuries were up around there too, and I think mortgages were 18% at one point. And that squeezed inflation out of the system and strengthened the dollar. It stopped the dollar from just collapsing. But we can't do that today. If inflation starts to pick back up right now, we have so much debt, because back in the 1970s, we were in pretty good shape financially. We could handle double-digit interest rates without it bankrupting everybody in sight. That's no longer the case today. Everybody is so indebted that if we try to use our one tool to bring inflation back under control, which is much higher interest rates, we will bring about a 1930s-style deflationary depression in a heartbeat. The minute the Fed funds rate got up towards double-digit rates, which is what we would have to do to stabilize things, then that would be the end of the current global financial system. So that makes this especially interesting from an economic nerd standpoint. In other words, theoretically, what can we do here? And it should make everything terrifying for people who don't spend their days obsessing over this stuff and figuring out just the right investment thesis and everything, and have to live through it. But that's where we're headed. We've screwed things up on such a vast scale that we're basically entering something like the 1970s, but on steroids, something vastly worse. Even if the details are similar in form, the magnitude of everything is going to be so much bigger that what comes is going to be not just something we live through, but something that ends the current system. So fascinating times and terrifying times. One of the horrible things about credit bubbles is that they lull you into a false sense of security, because basically everything goes your way. Any stock you buy goes up because of all that extra liquidity. So you feel smart and you feel rich because your stocks are going up, and your house is getting more and more valuable all the time. So you're a genius for buying the house. And so it ends up with a lot of people who are very complacent, like you said. Now we are at the tail end of not just a credit bubble, but a credit super cycle that began in 1971, or you could say 1913, but let's say 1971, because that's when we went off the gold standard completely. And buy the dip has been all you needed to know since today's 70-year-olds were babies. And so it's no surprise that the vast majority of people aren't really paying that much attention because they haven't had to. The basic stuff they do works. If they get a mainstream financial planner and say, "Hey, set me up with a retirement plan," and the financial planner puts them in a 60-40 stock bond portfolio. Well, that's all they had to do. They make money. Their house goes up and their stocks go up, and they have a comfortable retirement. So there's tons of boomers out there with ridiculous amounts of paper wealth because they bought a house in the 1990s and now it's up by 5 times from that. And they bought stocks during that same time, which are up even more.
Gold and silver remain central to the conversation as economic uncertainty grows and the ability to fight inflation with aggressive interest rate hikes becomes less viable. With inflation persisting, global debt soaring, and confidence in fiat currencies steadily eroding, both metals are regaining attention as reliable stores of value. History shows that when traditional tools fail and financial systems falter, gold and silver often emerge as the ultimate safeguards against systemic instability, monetary debasement, and long-term wealth erosion. Is silver set to lead the next phase of the precious metals bull market? Share your thoughts in the comments below. If you found this video useful, be sure to like, share, and subscribe for more updates on gold and silver. 97.4% of viewers haven't subscribed. Be part of the 2.6% who have by clicking that button and turning on the bell. Thanks for watching, and we'll catch you in the next one.